through that, one of the questions that has come up actually as well is around ESG. I think it was about, certainly I got a lot of airplay, I think about 12 months ago and so forth, in terms of, you know, crypto assets, they're bad for the environment because of the mining and so forth. Given that it is a big thematic more broadly, investors are much more sort of, I guess, aware of some of those issues. Just your thoughts around that.
Yeah, sure. So it is the topic. You know, ESG is very important to everyone, and it will be. And so in the Bitcoin environment, you know, I know I have that. As I mentioned, my background was being involved in alternatives, ESG, and digital assets. So I was a skeptic and a cynic, like a lot of us, around, well, look how energy consumptive Bitcoin is. It's the 70th most consuming nation in the world, if you call it a nation, you know, around Sweden, Sri Lanka sort of level, which is a lot of energy. And then that's obviously a very high level comment, which is quite often the headline. Then I started through research and talking to our research team, and we've got like a fantastic engineer that's spent a lot of time in the digital asset space, and he's got very deep domain knowledge about what's actually occurring from an ESG perspective. So I'll make a couple of observations. One of the interesting things is methane fluting of gas at all of those mines, and it's a big problem globally. And what a lot of people don't know is methane's 56 times more damaging to the environment than CO2. Now, the beauty of Bitcoin mining is it's geographically agnostic. It means you can put it at anywhere where there's an energy source that needs to be tapped into or it's available to be tapped into. So what is occurring, particularly in the United States, is they are tapping these gas flutes and creating the energy. So I saw this quote, which I just want to refer to it accurately, which to me really caught my attention, and I think it will our listeners as well, is Bitcoin is not a waste of energy, rather it harvests wasted energy. And I found that particularly powerful. As it is today, from a pure ESG metric, about 60% of Bitcoin production is green in itself. But then when you look inside these examples to me are really palpable. The other one that really caught my attention is in the listing space and in the equity space, people are trying to bring to market environmental energy assets like a wind farm. And what happens in wind farms is when there isn't demand for the energy and the farms, you know, the sales are up, the propellers are up, when the sales are up, the propellers just get turned into the wind and they stop producing. And so the ROI metric for wind farms is quite complex, and it proves up or proves down or doesn't make feasible the whole renewable energy project. And what Bitcoin does is allow these projects to prove up. And so the wind farms can keep producing. So that wasted energy piece is they are consuming energy, but they're bringing online and making the whole project viable, where otherwise without this, they're not. So I think we're going to see a lot more in battery farms, wind farms, etc. They're tapping in of Bitcoin mining as a solution to make projects viable. So that was an interesting insight.
Thanks for that. Yeah, I mean, I think it was when, I can't remember when it was exactly, but when I think it was Elon Musk that sort of I know was pretty vocal around you know, moving away from Bitcoin potentially because of the environmental concerns. So it seems like there's been a bit of development in that space. Some other, and there's a couple of questions that are sort of similar, but maybe I'll group them. Is so there's the one related. I mean, effectively, how do you value crypto assets, and sort of, I guess, somewhat related to that is that concept. Is it just like a sort of you know, if you can't value, what is it? Is it just like, you know, you're just the next person just looking to you know, you're just sort of propelling, almost like a Ponzi scheme in a way. So I guess that sort of skepticism around the asset class is there and I guess warranted.
It's warranted.
What would you say in terms of that sort of argument?
It's a great argument, and as I said at the outset, I've got an intrinsic or a fundamental background myself, so I had to get my head around this. So if you want to try and value the asset, there's a few ways, and we've put a paper up on our website. As I mentioned, that's CPD content. One of them is ways to value Bitcoin. So there are things like Metcalfe's law, which you've seen like in telecommunications, that the greater the network effect, the greater the value of the network. And interestingly, the Bitcoin prices, got an 85% correlation to Metcalfe's law, which is a very high correlation. So some people are considering that. Others see it as a commodity, and the marginal cost of production argument, like you do with other commodities, and then stock to flow is another. So there are methods, but none of them work in isolation. This is a different experience for everyone. But if you do want to look at those and triangulate them into a view. Importantly, Monochrome doesn't have a price for you because we're an index provider. We're providing safe access and facilitation of the asset. We're not making a directional call. The only thing I would say, personally, I'm invested in Bitcoin, and for me personally, I just looked at the very simple supply-demand dynamic. So supply is fixed. The production, the inflation rate of Bitcoin is about 1.6%. In other words, there's 6.25 coins being minted every 10 minutes as each block of the blockchain is being produced, and there's a halving every 4 years. We're at about 90% of total production. There'll be 21 million coins minted in the total protocol life, and it finishes in 2140. So there's a halving every 4 years. So we have 99% of it by 2040. So supply is clear, and then it just really becomes a question of the demand function. And as in my journey with the asset class, what I discovered was, as some of you would know, there are people that are really, really keen on Bitcoin and are fanatical. They're maximalists, and they tithing is something that they believe in, and so they put a percentage of their earnings each month or each week, whenever their paycheck arrives, into Bitcoin because they believe in it. And as a result of that, the demand function of that alone is greater than the supply function. So the production is being outstripped by demand. And that's before we think about the tertiary value or usages of Bitcoin, like the suits coming into the sector, which we've discussed. And the first time that it's been looked at as a diversifier, an allocation in certain people's portfolios. So it's, for me, I think the protocol won't break. Like it's proven 13 years, the actual protocol of Bitcoin won't break, and then it becomes a question of price, and this supply-demand function seems to be robust, supply defined and demand there. So a lot for us all to consider. You can use those metrics. We have a paper on our website that talks about the different valuation techniques that people are applying. And there are the people out there in the traditional investment space that are putting predictions out there as well. So by all means, pull them apart, but read them. There's insights there for us all.
And I guess being, still a developing space, I think you're absolutely right. My observation is there's still sort of a lot of testing going along about things like value. How do you value the asset class? I think it's still fairly fluid. Just an interesting one, and I think it's a question that comes up quite often. You get the RBA and other central banks around the globe have discussed launching digital, reserve, currencies. I think China's already done that. Just your thoughts around that, and is that?
Yeah, sure.
If that happens, what
does it mean?
Yeah, what does it mean?
So CBDCs, Central Bank Digital Currencies, are very topical, and the Australian Reserve Bank's got a project underway looking at it, and others are. Now, remember, come back to what is Bitcoin trying to solve? It's fiat currency agnostic, so it's not pegged, it's not connected, and it's decentralized. So think about the core tenets of why it exists. Now, a CBDC does not deliver any of those outcomes. It's like we've gone from paper notes to polymer notes to digital notes. To me personally, I've we've all got more research to do, but there is distinctly a difference between a digital currency issued by a government that's pegged to its dollar versus Bitcoin, which is purposefully, deliberately not pegged to any currency and decentralized. So, and it's borderless. It doesn't care. Like, you know, as soon as you go for a digital currency in a currency, well, it's bound to that currency. I don't know. I don't quite understand the proof case for why you would even do it. And we'll see. Some governments will, some won't.
Yeah. One of the questions here, and I don't know whether you've got any sort of thoughts or observations on this, is super funds. What are the super funds doing in this space? I mean, you did work at a super fund for some time as well, I know. So interested in any sort of observations you've got there.
Yeah, so the super fund industry has got some questions to answer, to solve for, not to answer to. Sorry, it's not a criticism. It's more of the things they need to solve for. Obviously, they're dependent on their institutional asset consultants doing some work as well. And I know those organisations have started doing primers and so forth. There are a number of pathways for super funds. One is that they make a decision in a part of their offer. You know, some of them offer more open menu structures that they may offer that product, a digital asset product, in that menu. Of course, trustees would require that it comes through a PDF structure so that there are consumer protections. Same for the wrap, super, you know, all of the platform providers, the trustees will require PDS to be issued. So the first step is that for that environment. For the diversified portfolio segment, then it becomes a combination of can it add value and packaging, and it's almost a marketing exercise. So we saw that experience with Raise was successful with having the Sapphire option. So I suspect we will see super providers considering not only the merits but also the marketing, like listening to their customer base. So the more millennial and the more the younger superannuants are there, and you know, trustees also have a choice. Do they not provide a solution that's paternal? In other words, provides, for example, an allocation so that the end investor doesn't burn their fingers in it and it's managed for them, or do they not? Because if they don't do it, obviously those younger investors are going directly to these unregulated exchanges. So there's possibly a solution inside the solution there.
Can you just talk about one interesting thing is, so there's Bitcoin, Ethereum, and obviously some of the other coins out there in the market. But I guess interested in if we focus on Bitcoin, the utility of it. So outside of, I mean, there's some arguments. Is it like gold? Is it, you know, whatever it may be? But outside of that, you're seeing some interesting developments in terms of the utility of the protocol in other ways, and so parts of the market.
Yeah, so there are two things to consider there. Bitcoin is digital money, and we don't want to confuse ourselves. So if you think of Bitcoin, there are two aspects to it. You know, small b Bitcoin and big B Bitcoin is the network. So you've got network and digital currency and as a digital money. So that's its primary purpose. So it's a foundation layer, and the protocol is so strict and considered. Some say that the transaction speed's slow, but there's like a trilemma, not a dilemma. You've got, you know, variant things. If you go for speed, there's usually more centralization and you give up security. And in the Bitcoin protocol, it's about it being extremely safe and protected. But what it allows is protocols can be built on top of the Bitcoin protocol. So the Lightning Network, which some of your listeners would have heard of, is like an application that allows you to transact in Bitcoin, and it feeds into the base layer. And now Ethereum, which is the other asset that's obviously getting a lot of interest inside that protocol, it can deal with things like smart contracts, DeFi, NFTs. So it's the value in that ecosystem is actually embedded in the Ethereum blockchain, where with Bitcoin it's separate to it. So Bitcoin's core function is it's digital money and a store of wealth, and that's what it is. And again, because of its scarcity, it'll have its own pricing dynamic based on the fact that it has a limited supply. Where Ethereum, obviously, the protocols are more open and it's still evolving. So there's a lot more price discovery probably in terms of what Ethereum ends up being based on all of the different innovations that come into the protocol.
One of the questions that's come up, and it's probably sort of from a product perspective, is with custody and so forth, and keys, and I know we discussed this the other day, and you used the term called sharding and so forth. Can you just make our brains explode a little bit more and just go from a custody perspective?
That could be messy.
Yeah.
There's a concept called sharding. So you think of your key as a code, and it's like your password, but it's quite long. And all that occurs is that parts of the password are given to each part of the custody process. No one has complete control. And so sharding is just a cutting up of the password or the key so that no one can. It's a bit like, in trust accounting, you need multiple signatories to release an asset. And a custodian has protocols around ensuring that money is not released until multiple parties, unrelated parties, approve the transaction. So that's what sharding is. That event is just that basically the keys are separated so that in a way that also protects the key, because it's not held all in one place, and they're held in different locations, and they're held by different parts of the service provider outcome, and then they're brought together to transact. And on the way out, it's even more secure in that the protocols are actually verified with Zoom calls, verifying with individuals, like our custody provider, our service provider, liquidity provider, and ourselves. And it's a very, very, very secure process. So the sharding of keys is a really important part of custody, and it's a way of protecting the wallet so that someone can't get into it without the full key.
Mm-hmm. Maybe one last question before we sort of wrap it up, and liquidity. You did touch on a little bit in today's discussion, but liquidity within the asset class. Any sort of observations there?
Yeah, well, I'll focus on Bitcoin today, if that's okay, but that's a very deep liquid spot market. And that's, again, what ASIC's guidance has been. Only Bitcoin and Ethereum meet that criteria of a mature spot and futures market. So, both of those assets don't suffer from, in saying that, there's certain ways of accessing the assets where are more liquid than others. For example, from Australia, the Australian dollar Bitcoin market is thin, is not liquid enough and deep enough. So we transact through US dollars. So without confusing everyone, basically at a point in time in the month, we back to back Aussie dollar to US dollar and transact in Bitcoin all simultaneously, because the US dollar is 90% of the Bitcoin liquidity market. And we have liquidity providers that provide the service for us. So there are deep liquid markets, particularly in Bitcoin and also in Ethereum, that will ensure that we can transact. Remembering we're an index provider as well, so we'll transact at the market. Yeah.
Mm-hmm. Great. Look, we might wrap it up there. There are a few other questions that we just didn't get a chance to get through, but we'll go through those and hopefully be able to sort of come back to some of those questions directly. So Craig, thank you for your time. I think, look, this is an area that I think everyone's it's not static. Everyone is still learning, including ourselves, and no doubt it's going to evolve as the years progress. But thank you once again. Thank you for your time. If you are interested in some of that educational material, obviously Monochrome has that on their website and so forth. And we will continue the discussion, because I don't think this is going to end. And I guess just to recap, from a Lonsec perspective, we will be, once product is available in terms of in our sort of market, then we'll be looking at rating those products in due course. So thank you everyone for attending. Thank you for your questions. As always, there's always a lot of questions in this space, and and it's in a way pretty exciting because you get very divergent views. You've got people that, you know, at polar ends of the spectrum, which is interesting. So thank you once again, and actually we will have one of the questions just to wrap up. There will be a copy of this, of some of the presentations, so forth, available. So keep an eye out for that, and we'll wrap it up there. Thank you.
Thanks everyone, and thank you, Lucas, for the opportunity to talk again, mate. It's been a great discussion.
No problem. Good to chat.